what we saw in the space is, people don't mind centralization. They just want transparency on how much centralization exists.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Aya, thank you so much for joining me today. Super excited to chat with you. All right, Aya, you are the co-founder and co-CEO of August. August is an institutional grade prime brokerage platform for the digital asset ecosystem. Previously, you worked at the expert network Tegas, the crypto fund Pantera, and the digital asset brokerage FalconX. All right, so taking back to Tegas. So Tegas is an expert network. Will expert networks exist in a world with AI? That's one thing I always thought. I was like, will people need to call experts in whatever subdomain if AI can just answer that question for you? What are your thoughts there?
Yeah, that's a great question. So, when I joined Tegas, I was the first hire of the company, and at the time, we only had alpha sites, and so expert networks were really structured such as you'd speak to one person. For example, if you were investing in a company in that domain, you'd speak to that person, you'd get that information, and then you wouldn't share it. And so you had multiple people speaking to the same person and paying a very high price point. And what we saw in the market at the time was, what if we turn this into some sort of SaaS model whereby, one person speaks to that individual, has a number of, typically most of the folks speaking to experts have the same questions, has a number of questions, runs through it, and then you can actually record it and you can price it for everyone at a lower price in order to read the transcript. And so that did really, really well. To your question, though, there's a lot of inherent information that comes from working at a company that AI simply will not have unless, for example, they were to personally interview that expert after they leave the business. And so, for example, it could be the types of products they worked on. It could be what the process was. One big question was, when you enter a new market or a specific country, how is regulation? What is the style of doing business? How difficult was it for you to open that market? And then how easy will it be for you to take that market, for example, in the Philippines and move it over to Vietnam and launch that similar product? And so I would say actually a lot of things are still very, very much dependent on a human-based experience versus a more generalizable AI prediction based off of whatever's public.
Very cool. Yeah, no, thank you for answering that. I've always wondered that, so I'm happy to ask you that. And Tegas, you were employee number one. Tegas recently sold for like 900 million. So that's incredible. I think they're Chicago based as well, so that's kind of why I know about them. But very, very cool. All right, so you went from Tegas to Pantera. That's a pretty big jump because obviously Pantera is one of the top crypto funds. So, like, were you bitten by the crypto bug like at Tegas, or was there someone you spoke to there, or how did that happen?
Yeah, so actually, the first time I got involved in crypto was in 2016. So I was at a consulting firm that was consulting for all of the major institutions and financial institutions, bank, JP Morgan, Goldman, et cetera. And at the time, my boss was from Argentina, and he had to buy a textbook for one of his cousins using Bitcoin. And so that's how I got involved. I was like, "What is Bitcoin?" I read the white paper, and transparently, the Bitcoin white paper is very, very difficult to comprehend. I remember reading it and thinking, I understand this as digital gold, but the white paper itself was 100% above my pay grade. And so from Bitcoin, I actually really, really felt some sort of attachment to Ethereum. And then reading that, and not only reading the Ethereum white paper, but also understanding, this was the first phase of the ICO boom and bust in 2017. And so understanding some of the use cases there for some of the early DeFi blue chips, that was really interesting for me. And obviously at the time, consulting for some of these large financial institutions, it was very, very obvious why some of this needed to come on chain and just become, way less operationally challenging as it was with the overhead the financial institutions have. So that's how I got involved initially. At Tegas, I remember, my holiday gift from the company was a Bitcoin mug. I talked about this all the time. And, when I had the opportunity at Pantera, it was really the chance to make a hobby my full-time job. And so was really, really excited to join the team there. And it was at such a pinnacle in terms of where Pantera sat at the time. Pantera sees really all the deal flow internationally across the space, and also specifically where crypto was in how early it was with the different institutions and infrastructure providers that existed in the space.
That's awesome. Very cool. Okay, and then after Pantera, you went to FalconX, which is it's itself a digital asset brokerage. What'd you learn from that experience there?
Yeah, so let me actually take a step back and kind of talk about what
Yeah.
the industry looked like at the time. And so when I was at Pantera, the only way to buy crypto, let's say you wanted to buy Bitcoin or ETH, you had all these ICOs happening, and so it was like, okay, I want to get involved and I want to buy Bitcoin and ETH for whatever purpose. You had at the time only local exchanges, so every geography had its own exchange. In Europe, you had Bitstamp. You had a number of local exchanges out in Asia, and obviously BitMEX. In, Mexico, you had Bitso, and then you also had a number of local exchanges in South America spread across. And in the US, you had Coinbase Kraken. And you also started to see on the institutional side, let's say I wanted to buy, a larger chunk of Bitcoin, you started to see market makers enter the space. So DRW out in Chicago. Of course, you had GSR was another one. And OSL, for example, had been in the space for a while, also localized. And so, when I was leaving Pantera, we had just started to look at this aggregation layer. So, obviously, because the exchanges were isolated per geography, they had different liquidity based off of whoever was trading there at the time and the market makers on that exchange. And so you didn't always get the best price. And in order to get the best price, you'd have to onboard with, call it, 25 different platforms and then also cross collateralize across those platforms and pre-fund, which was a really expensive and terrible experience. And so, when I was leaving Pantera, we had just made the investment into Tagomi, which is how I found out about FalconX and made the jump over to FalconX as well. And with FalconX, it was really just about the aggregation layer. How do we plug both market makers and exchanges into one place such that when you want to trade an asset, you click a button, and on the back end, it's looking at anywhere between 25 to upwards of 50 plus different liquidity providers and really offering what we called at the time best execution. And so, I'll talk about this again, but the aggregation layer was really, really important. Then at FalconX, this is 2019. We then started to enter the world of the DeFi summer in 2020. And that was the golden age of DeFi. That's when you really started to see so much activity move on chain. And you started to see, I think, DeFi TVL went from 700 million to over 15 billion in that year alone. You started to see, the tokenings that we talk about all the time: Compound, Aave, Uniswap, Synthetics, Yearn, Maker. These are the names since 2020 that have been able to withstand super resilience against all of the liquidations that have happened in the market over the last 4+ years. And so that was the year of 2020. You started to see more liquidity come into the space and really start to kind of anchor both the exchanges as well as the market makers, and most importantly, the aggregation layer. So that's where we really started to see a pickup in clientele and market activity. 2021 is when you started. That was an important year for the institutional kind of CeFi players because that was the stablecoin adoption. And so in 2020, had roughly, call it, under 100 billion in stablecoin market cap, and today we have over 220 billion in stablecoin market cap. And that was really the year where you started to see DeFi TVL expand. In the billions, you started to see DeFi users expand in the multi-millions, and you started to see revenue both on the DeFi side and the CeFi side. I'll take a pause there, but I can dive into kind of then the layer ones, layer twos expansion, and more fragmentation that we started to see in the space.
Yeah, so, to your point about Falcon X, their product suite has evolved dramatically from the early days. So yeah, they were just focused on aggregation early on. And so I guess for you founding August, was your thought process, okay, the ecosystem is missing this important piece, which is digital asset brokerage. We want to be the ones to go and execute on that, or what was the ideation there where it came to, when it came to launching August?
Yeah, I would say, you know, you have the aggregation in CeFi and, places like FalconX and others. But what I was still seeing in CeFi was the same operational issues that I saw when I was, working with large financial institutions, and that is people issues. And you saw that in 2022, right? And the main thing is people were not being very transparent about their liabilities, balance sheets. People weren't necessarily writing things off in the proper way, or disclosures were completely inaccurate. And you see that with this black box of CFI, because when you go and interact with one of these counterparties, you have no idea how much debt they have. You have no idea where their liabilities are and to whom. And so you can't really underwrite that risk. And obviously that blew up in 2022 when Luna collapsed. You had then FTX and Alameda wasn't able to manage again the liabilities, just given how much risk they had taken on the books, and then the collapse of a number of other players in the space. And so for me, it was very clear what worked in 2020 was DeFi blue chips. These products work. Aave has over 20 billion in assets on platform and TVL, and it has functioned properly throughout a number of these market cycles, Black Monday, or Black Tuesday, excuse me, in crypto. Uh, you know, all of the liquidations over the past almost 5 years. And so, how do we move this prime stack on chain such that you can get the same interaction, whether it's an institution or high net worth individual, in the same way as you would with a DeFi blue chip? So, non custodial, transparent, the ability to underwrite your risk, counterparty risk with other players, tri-party agreements that are transparent, and instant on-chain settlements is really kind of the purpose for August and leaving FalconX.
All right. So did you did you and your co-founder, did you guys decide, okay, we're gonna launch this, and the initial vision was fully intact, or was it kind of like, okay, we're gonna execute on, part A, and then we're gonna add in part B and part C, or was it like, no, it only makes sense if it's a full suite from early on?
Yeah, it's a great question. My entire life has been working at companies where clients have asked me for products. I always say yes, and then we build a company around that use case, and that has always worked out so well because the client is really king. And so that's really what started August. At the time, we had a number of clients come up to us and say, "Hey, I have these on-chain positions, and I'd like to cross-collateralize them with CeFi positions, or we also had clients, lenders specifically, who said, I'm no longer comfortable with lending to these counterparties. And I'd like a solution where I can lend to a counterparty, know exactly how my loaned assets are used. I can actually whitelist exactly how these assets both are used, what token they're exposed to. And I don't need to trust solely underwriting their balance sheet. And there isn't this black box model. And so what we built was a solution for both of those use cases. One, we have one place where lenders can decide exactly how loaned assets are used. They get full transparency into the loan lifecycle, and that's really really important for them in terms of bringing back these lenders post FTX, Celsius, and Voyager. And then two, for the borrower on the other side, we're the only platform today that allows for you to really cross collateralize an on-chain position. It can be a portfolio of, call it, 5, 10, 15 uh, different yield positions, Pendle, Aave, a number of different assets. We work to underwrite those. And then you can, for example, borrow against it to hedge, go delta neutral. Or, for example, if you want to go momentum long, and the lender sees that entire life cycle and exactly how that's used and can kind of arrange the rate relative to that.
So when you're at a cocktail party with non-crypto folks, how do you explain what August is, like the one-liner? Because you guys do a lot. So how do you succinctly like say that?
Yeah, that's a great question. I would just say we're a platform where any institution can trade, borrow, lend in the most capital efficient manner today.
And so how are you guys, how are you able to, I assume, maybe I'm just guessing, but maybe a smart contract to be able to see, hey, I only want my loaned assets uh, uh, being able to be used on like Aave or something like that, or how are you able to enforce that rule set?
It's a great question. So you're exactly right. It's the relationship very similar to an exchange where you have a Binance parent account and then you have a Binance child sub account. And the Binance parent account is the one that has all of the permissions that are set for the traders within the sub account. So very similarly, what we've done is we've built smart contracts where you have that same parent-child relationship. The parent relationship is the one setting all of the permissions and whitelists on exactly what the user can do. And it can be as broad as you can engage with this blockchain, or as specific as here are the functions that you can call on this specific protocol. And so, what's really cool is, let's say a lender only wants you to stake assets with the loan that's being used. They don't want you to swap into other assets. You can restrict that with our smart contracts. And then the child relationship is a trader within that account. And so they're able to do a number of functions, whether it's, trade, execute. They can, run, like I said, a delta neutral position, quote OTC, or request additional loans as long as it's within the permissions set by the lender.
So let's say I'm staking Sol, but for whatever reason, I really want to swap into, I don't know, USDC or whatever. Can I contact the lender somehow and say, hey guys, I know you said I'm just allowed to stake, but actually I want to be able to swap. Can you guys enable that for me? Or is that not really how that works?
No, you're spot on. That's exactly right. So let's say, they'll see a list of permissions that they have on the account. If they want to request a new permission, they absolutely can. If they want to then have a conversation around, expanding the strategy, they can. At the end of the day, it is the lender that chooses to underwrite because they are taking additional risk. They may choose to either increase or decrease the rate of the loan. And then the LTV is also affected based off of the assets sitting in the portfolio. And what's nice is, because we see both legs of the trade, both the collateral for the loan and how loaned assets are used, we can offer a much better LTV and health factor because we can, underwrite both sides. And so, as opposed to this kind of off platform lending that we're continuing to see, you lend against something that's over collateralized, but you have no idea how the loaned assets are used. This for us is a much better model, both for the borrower and for the lender who gets that transparency.
Like August is, I'm spitballing again here, but it seems like it's the perfect combination of CFI, DeFi, right? Because it's using all the strengths of DeFi in order to add that transparency and which is so essential to obviously credit. And but you guys are like a regular company. You're not a decentralized protocol. Is that correct?
That's correct. That's correct. And for exactly the reason you just mentioned, what we saw in the space is, people don't mind centralization. They just want transparency on how much centralization exists. And we've seen that, even with DeFi protocols like Hyperliquid, for example, but definitely with a business like ours, we have clients who want to trade options against their on-chain positions. And maybe they want to do delayed premium payments. Maybe they want to use another asset as a margin payment and with the market maker. And so we facilitate that. And that facilitation, sometimes will take a centralized counterparty in between, and they don't mind as long as it's fully transparent. They know exactly how the assets are used, where they fit, etc. So, yeah, I agree with you 100%. And, the goal for us is really going back to the aggregation layer and kind of this searchability is, how do you make things, just the user experience really easy for you to do everything you want in the space in one place. We see credit as the hook to that, but really, the experience should be not just the credit piece, but really all of the different functions on top of it, and that's where we get really excited for the both the purpose of underwriting and complexity.
Yeah, if you think about I don't know. I go back to 2008, where with the housing crisis, and the reason that some of these early investors that profited off that were able to identify that there was a major issue was because they looked into these CDSs and were like, oh my gosh, like these mortgages are terrible, and anyways, they understood these are terrible assets. So in the world that you're building towards, in theory, that's going to be mitigated. I don't like to say it's going to be zero, but it's like everything is so transparent. It's going to be so easy to spot. Do you imagine institutions, like TradFi institutions, do you think we're going to head, or do you think we're going to go that way rapidly, or do you think it's going to take like a 20-year process of us kind of slowly entering our assets on chain to create a truly like better financial system?
Yeah, it's a good question. I would say it's already happening at a much faster pace than people anticipate, and that's because banks can't necessarily publish every single thing that they're doing publicly. But we have conversations with, for example, a GSIB bank, and they're doing a significant amount of work by internalizing some of these functions, whether it's using a private blockchain for FX settlement, having their own stablecoin internally for backend operations and cost. And so there's a lot happening in that department, and that's very exciting. On what we see on chain, you can look at BlackRock Biddle, you can look at stablecoin adoption. I mean, I would say those are the two pockets today where we're seeing a lot of that institutional adoption. But it kind of goes back to the funnel I saw at FalconX, where you have institutions start here at the top. and they come to you and they say, "Hey, I just want to buy, Bitcoin and ETH." And they get really excited about Bitcoin and ETH. They start to read more about the ecosystems on both. And then next thing you know, they call us and say, "Hey, I want a 150 market cap token and I want to tee you up into it." And you're like, "How did that happen?" And so I think you'll see the same adoption as you go more and more institutional. Of course, all of that will depend on regulatory clarity. At least in the United States, we're seeing that progress at a pace that we haven't seen, over the last 8 to 10 years.
What were the early customers like? And also, did those early customers, do they differ than the folks you're talking to today? Or was it always kind of more, I don't know, more CeFi? I guess not even CeFi, but was it always, were you always impressed by the caliber of customers? And of course, you're going to say yes, but I mean, like, I'm talking like the BlackRocks and those types of folks.
Yeah. I would say every company starts with your top kind of 25. Any institutional company starts with your top 25 clients. And so, the beginning of Falcon X into, I would say, kind of year two, I would 90% of the company's revenue came from 25 top clients. And similarly, August is the same. I would say, any large, even if you look at, for example, Goldman Sachs, it's like, 1% of their client base accounts for 90% of the bank's revenue. And so it's still very similar there. We obviously have the retail company Upshift. And so, from that perspective, because we have both sides, institutional and retail, we see a lot more diversification in our revenue streams than just institutional. Institutional in general tends to be very macro correlated as well. And so that diversification is important. But going back to your question, it tends to, your typical client base is always the crypto native folks, right? The learning curve's a lot shorter. They're already running, a lot of these strategies on chain, and they have a lot of very unique pain points that you're solving for. And you take something that's very, very niche and then you expand it and make it more generalizable. Where now today, someone comes up to us and says, "Hey, I'm sitting on a lot of the securitized products, BlackRock, the Apollo credit fund, and I'd like to, use that as collateral for a loan." That's a much more generalizable request than some of the requests we get on the more crypto native side.
And so these retail customers, are they actual, like, regular people that are not associated with any sort of institution? They're just like people that, hey, I want a loan and whatnot, or are they associated with the fund, or is it literally just actual retail?
Yeah, so Upshift is a completely separate company that faces retail, and that today is a, search and aggregation platform for yield. And yes, today, any retail has been able to access as long as they're outside of restricted jurisdictions. And then is fully automated in terms of their ability to deposit, see exactly where the yield is sourced from. And the idea goes back to aggregation, right? And even, I think the interesting question around the philosophy of search, if you think about how search used to be Google and now it's ChatGPT, think about how often you spend, on a Google search engine, and even how that's changed since ChatGPT and Gemini and some of these others have evolved. The same thing can apply to crypto in that, you know, what used to be the market in 2020, any retail or any institution could, be a DeFi yield farmer. And it was, not a full time job. Today, it's beyond a full time job because you have 25 plus blockchains, you have 500 plus tokens, you have 350 plus protocols with actual TVL. And so for you to analyze each and every one of them, it's just not feasible. You have, funds who are running this with 25, 30 plus team members. And so for us, it's the idea again of aggregation on DeFi level. How do you make that a lot easier for someone like you or I to be able to access without needing to go and hire 30 people in order to do so at scale?
Very cool. What about counterparty risk? I don't know, because you always hear about hacks and there's all sorts of different key man risk here. How do you solve for custody and kind of counterparty risk?
Yeah, great question. So we've undergone 4 audits. We haven't had any issues in the last 2 plus years of doing business, knock on wood, but it is very much a risk. And, one of the things we do today, we're integrated into 15 blockchains and I want to say over 60 protocols. And, for us to integrate into a protocol, we both do a security audit of our own. When we run integration, we have to have a direct line with the team and be comfortable with, the way the docs are written and things of that nature. But there is definitely a risk. And so we have things like Hexagate, who, for example, will integrate and they will look at, on-chain flow funds, make sure that the smart contracts we're interacting with both don't have any AML or terrorist account financing in those same pools or funds. And second, keep an eye out for any potential hack risk. And then we have redundancy as well on signatories across all smart contracts. But at the end of the day, the smart contracts are fully non-custodial. And so going back to the kind of parent-child relationship, the smart contracts are never owned by us. They are owned by either the lender, the borrower, or if there's no loan, just the trader itself. And so, we can't, for example, withdraw funds from that person's smart contract. We can never send funds to another address that is whitelisted. These smart contracts only ever have two whitelists on each of them. And so the hack risks, I would say, are twofold. Either you interact with a protocol that gets hacked, and again, knock on wood, we've been very lucky where that hasn't happened. Or two, you yourself, get hacked through, let's say, your Fireblocks or Fortify, and that's how a hack happens. But it is definitely still a risk and something that I would say, at least on the institutional level, we've been working with a number of insurance providers in order to solve. And I would say that's an area that could use a lot more growth before we see larger players come on chain.
Yeah. Okay. So touching on that, and again, this is not necessarily your area of expertise, but just spitballing. You know, BlackRock doesn't want to have to worry about whoever's executing the trade through their Fireblocks or whatever. Maybe that person got hacked, and that's a disaster, right? So in your mind, what needs to happen in order to get the BlackRocks of the world completely comfortable from risk custody risk and like a hacking risk standpoint for them to be like, hey, this is nothing. We don't have to worry about whoever's executing the trade getting hacked because it's not an issue. In your opinion, like what does that look and feel like? I know this is not going away from August, but just curious.
Yeah, I mean, look, I would say BlackRock surprisingly has the appetite for that today. You can see more products being built with BlackRock as one of the underlying treasury products behind those tokens. And I would say, the difference here is centralization, right? And it goes back to if something does happen, can the company BlackRock freeze the asset such that it can't be transferred? Is there that centralization capability similar to Circle? We've seen that with Tether a number of times. And that's the kind of piece that I would say everyone's looking for on a trust aspect. And then on a smart contract aspect, what we need to see is more of these insurance providers not just insure the underlying smart contract, but actually become the auditor. We've had the good fortune of working with fantastic auditors to date. But I would say really the audit shop should sit within the insurance company because the insurance company should be the one that's actually underwriting all of these smart contracts, feel really comfortable with the way they're built, and therefore be comfortable extending insurance on top of that product. And it's not just the protocol themselves, but as I mentioned, it's also the assets that are then deployed on top of the protocol. So we've seen, for example, hacks happen where potentially, the protocol is safe and sound, but the asset itself, there was a wallet that was hacked and it's being sold on a specific protocol. Does that protocol have the ability to then freeze the market? Things like that, where we've seen more centralized players win because they have the capabilities of pausing, freezing, whatever it might be for that specific product itself.
That's very interesting. So do you foresee a future where smart contract audit firms are going to be acquired by large institutional insurers?
I would say one, it's already happening, and two, insurance providers, all the large ones are very much looking into having these audit shops internally. Majority of them are doing so through partnerships. I would say M&A looks like it's heating up this year. We'll see how macro continues to play out. But yeah, that would definitely be a trend that I have for 2025.
Very cool. All right. So as you've been building August, have the challenges been more on the technical side or more on the regulatory side, or maybe a bit of both?
I would say it's more on the technical side. The the product we're building is incredibly complex. It's very, very hard for you to have a position that you can reflect both on not just one chain, but on 15 different chains, and then be able to underwrite the health factor of that asset. have multiple redundant oracles, some of which we write ourselves in house, be able to then, get a lender comfortable with that asset, and then be able to plug into all the OTC providers, exchanges, and so forth, for you to be able to manage a very complex position all in one place on a functional UI, with a great user experience. So I would say the product itself is quite complex. The goal for us is how do we simplify it as much as possible so that when you are a user of the platform, you're not thinking about the 7, 8, 10 things that I just mentioned. But really, it's a simple UI that allows for you to click buttons to do any one of those things. But it is very complex. Today we reflect OTC option positions on chain, and that's something that hasn't been done before. In general, the OTC market in crypto and traditional finance far far expands anything that's done, whether it's on exchanges, or anything systematically on chain. And so the idea is how do we break into that market, bring that on chain as well, make it a lot more efficient. And so part of that is both on the technology perspective. The other part is just also convincing counterparties that it's a way better model, than the process they're doing today, and that just comes with size. And so as we continue to grow, today we do 7 billion in monthly volume. As we continue to expand that, the goal is very much to continue convincing the partners to move their operations on chain.
Very cool. Have there been regulatory challenges, or has it been? I mean, you guys have been around for some years, so maybe it shifted recently. But have there been any regulatory challenges, or has it been relatively smooth sailing because of your structure?
Yeah, I mean, look, I would say for the United States, it's not a market that we support today. It's a market we very much want to be able to support. And from that perspective, we still don't have necessarily clear guidelines, but I will say the guide, at least the conversations we've heard from investors, close colleagues who are speaking to folks down in DC, it's happening at a rate that's very, very fast, but it's not going to happen in, 4 months or 6 months. And so we're continuing to build with the, mindset that over the next, hopefully 2 years, we'll be able to expand into the US market and just have very clear guidelines on how to do so. The one thing I will say is, at least what I've seen is, I've seen, crypto companies spend enormous amounts of money over the last 5 years trying to follow a specific guideline. And then that guideline gets changed 2 years later. And all of the resources that were expanded into or spent in that specific area, were just not applicable anymore for the new subset of rules. And so for us, what we're looking for, at least, to be as efficient with our capital is clear guidelines that we can invest into, for not just the next 2 years, but ideally the next 10.
Very cool. So you mentioned that there was 7 billion of volume traded in what was it this year, 2025
Per month.
per month. Oh, wow, that's incredible. Okay, so I have to ask, how does August make money?
Yeah, so it's a combination of things. I actually think our last month was 12 billion. So we are we we are increasing month over month. Despite crypto markets, we had our best month. Actually, we had our best quarter in Q1. So it's very exciting for us. I would say on the fee side of things, it's a blend of things, both transaction fees for trading as well as a fee spread for anything on the loan side of things. And it would be, a mix of those two.
Very cool. This is kind of nitty-gritty, but in terms of the reporting, I'm always intrigued by kind of the back office stuff. How is that? Because, I mean, you're talking about this product, which is complex. Of course, everything's on chain, but that doesn't mean, my initial reaction of setting up a fund in crypto in 2017 was, oh, our fund administrator and auditor will have an easy time because it's on chain. Of course, it'll be like a breeze. Absolutely not the case. It's like way more difficult for some reason. So, yeah, do you guys have reporting available? And if people want to figure out all this unusual stuff they're doing long, short, like the lending, blah, blah, blah. How are they able to, are they able to succinctly see in like one report? Just curious.
Yeah, it's a great question. I would say today there's no platform that does this in the way you and I want to see it. And the reason for that is it doesn't matter how many accountants you're throwing at the problem. It's just incredibly complex. Ideally, you would get Etherscan or some of these other blockchain scanners to, really organize each transaction in a much cleaner way, such that you could pull the report directly from Etherscan itself. Um, you know, They just, that's not a priority for them. And so a lot of the work that we're doing is cleaning all of the blockchain searches for each transaction within an account. It is, definitely not where we want it to be, I would say, but it is better than what I've seen in CFI, which is, Google Sheets and spreadsheets. So, we're at least the difference here is every transaction is on chain. And so it's verifiable. There's no fat fingers on the operational side or accounting side of things. And if someone doesn't trust the report that we give them, they can actually go and search it on chain and then be able to verify it themselves. And so I would say we're moving in the right direction, but we're very far from, I think, the report you and I want to see. Whereby, if you look at some of these Web 2.0 companies, you click download, it brings you this beautiful report in CSV file. We're definitely not there yet.
Soon, one day, soon. I've been hearing soon for so long. Um, Very cool. So, has there been any user behavior, or actually, no? What's the most popular user behavior? Are the majority of users are they interested in loans, or what are they? What is the most popular activity?
Yeah, I would say good question. So, we see both delta neutral and momentum. And on the delta neutral side, what we've seen a lot of usability is, for example, someone has a DeFi position, they want to hedge impermanent loss. And so they have the DeFi position that they're actively managing. That position can be across multiple blockchains. They have it. So our smart contracts, you'll see, they connect to multiple blockchains. So you'll be able to have multiple types of positions all in one place, and then they can borrow against that. That loan will then be used to either, with some derivative or option to hedge the impermanent loss. And then you'll have both legs of the trade in one place. And so you're managing the health factor across both, which is great. So I would say that's a really big use case we've seen. The other use case that we've seen is people just going momentum long. They have a position they're very bullish about. Maybe they're point farming, maybe they are liquidity provisioning, and then they want to take a loan against that. And for example, maybe they want to market make on exchange. Maybe they want to continue buying up that token, or maybe they want to, just put on a completely new trade with that loan. So I would say those are typically the two. We do see a lot of things on the kind of structured product side as well. People looking for some sort of fixed rate with floating upside. That's been very interesting for folks in a market that's been a little bit quieter. And then outside of that, we're always seeing just really interesting requests around someone has some sort of position, they want some capital efficiency on it, or they're looking to find ways to, for example, just make it cross collateralize it across different blockchains. And so that's typically where people will come to us for.
Has there been a specific user behavior or strategy, or something that you were totally like, wow, I had no idea that this was even like a thing or possible, or has it mostly been like pretty vanilla?
Yeah, it's a good question. So I would actually say the birth of Upshift came at a complete surprise for me. So Upshift launched in November of last year. And as I was mentioning earlier, all the products and companies that we build come from client requests. So we'll basically have a client come to us, and then next thing we know, we have multiple clients coming with that same request, and lo and behold, a product is born. And so for us, what happened was we had a number of institutional clients in September, October of last year who said, "Hey, I really like your smart contract tech, and I like what I can do with it, and I think I can build a retail product based off of it outside of this institutional one that you've created today." And so, the retail product, what it looks like is an institution that has the parent relationship, which is volts, as you've seen on chain. I think that's the nomenclature that people kind of use today, but it's really just a smart contract. The smart contract receives deposits, and the smart contract has a number of permissions that are set for that specific vault. Within that, then you have a strategy manager or a curator, and that strategy manager will operate within the permission set on the vault. And then you have the full kind of UI that shows all the transparency around how those assets are used. So that that product itself at peak in Jan, I think we were almost a 400 million TVL. And that product, has done tremendously well. What we've seen is a lot of our institutional clients say, "Hey, I want to run these strategies, on the retail side. And I want to be able to, one, sometimes they beta test different strategies. And other times it's a strategy, what we've seen majority of times, it's a strategy that's being run within the fund itself. And for the curator, what they can say is, "Hey, this clearly worked. Now I have 100 million in TVL in the strategy. I can use this to go raise funds, additional funds for my main fund, and show that I clearly have some product market fit here." And so that has been a product I didn't expect us to go into when we launched August and in 2022. But that's been a very pleasant surprise.
Very cool. So building, you guys have been building for some years now. What is it like building a company in crypto? Because I mean, I don't know a space that's more volatile and more kind of crazy. And building this complicated of a product in this crazy market, how has that been for you?
Yeah, it's funny you asked because, with all the volatility we've seen, with macro and the S&P, for all the crypto builders, we're all like, "Okay, we've been there, done that." No news for us. I would say it is, you're constantly on your toes, but the importance of building in crypto is surrounding yourself with the right people. And I've seen that, the culture comes from the top, and if you set the right culture around accountability, responsibility, not having to, micromanage people and empowering individuals to do their job. There's also a sense of respect that comes with the business as well. For example, our business, half of our employees have children. A work-life balance is very important to them. That's obviously, hard to do with a crypto ecosystem, but we try as hard as we can in order to balance those two things out. I think there is a very healthy balance of, growth relative to burning out your employees. And then, just making sure you have the right talent. For the right talent, it's worth growing a little bit slower in order to maintain, the right people at the business. And so that's been one really, really nice experience in going from, being part of a founding team to actually running the company myself is being able to set that culture at the top. I would say, everyone at our company is incredibly respectful of one another. It's a pretty flat org. And the beauty that comes with that is everyone does their best work without the negativity, without the stress, without the, drama that sometimes you see as these companies scale in size.
So how do you view how do you view hiring? I feel like hiring is a skill really. That it takes. I don't know how you get good at hiring. I feel like I've read books on it, and I'm just like I don't know if I'm good at this, and I don't know if I'll ever be good because it's just a very difficult skill set to have. But in your opinion, is it a how do you feel about your skill in hiring? Do you feel like you're exceptional at it? Do you feel like you need work, and how do you feel like you improve that?
I definitely don't think I'm exceptional at anything, especially when it comes to hiring. To your point, it is absolutely a full-time job, and it's probably the most important job that I have. Is bringing on the right people into the company because it has such huge impacts on not only the product, the roadmap, but the culture as well, which impacts all of those things. And so, for hiring, I would say it's kind of multifold. We look for people who are really scrappy. We always talk about this kind of have a chip on your shoulder. You're looking to build something really different and do it at scale. We're looking for people who don't have an ego. That's another thing that you can kind of assess, during interviews. Always looking for good recommendations. So how long have they been in the space? How often have they, transitioned in different roles and why? And then looking for a level of creativity. I would say, something that's really hard when building this much, as you mentioned, it's a complex product. You're building a lot with a very small amount of people. The one thing you want is for people to come to you with product ideas and say, "Hey, I know what our product suite looks like. Why don't we try something like this? Why don't we A/B test that? Why don't we, start to look into this new language that was just updated or announced on the engineering side of things." And so that's something that we also look for too is that level of creativity. And what's really fun to see is the team just kind of jam out on ways that we can direct the product. We try to have quarterly retreats where everyone's opinion really matters. And so if you think we should be building something, then we'll absolutely go A/B test it and then try to implement it based off of whatever our clients say.
So how do you describe your management style? And then how would your teammates describe your management style? Is it a match or do you think there's a mismatch potentially?
It's a good question. I'm sure I'll have them listen to this podcast afterwards and see where we fit and differ. I would say I again going back to my earlier point, we look to hire people who do not need micromanagement, are incredibly accountable, and are able to do a lot with a little. And so, on the management side of things, it's just reiterating those three things. My job is always to make sure that everyone has both the resources that they need to do their job, but also make sure that I'm protecting all of my employees' time. And what I mean by that is focus. The number one thing that kills startups in any company is focus. And that's because as you become larger, as your brand becomes more well known, as you bring on more clients, people will ask you for a number of different features, and not all those features are the right features for you to be working on. Not every blockchain is the right opportunity for you to chase. Not every ecosystem is the right one for you to partner with. And so, one of the things that I primarily focus on is how do I, reprioritize the team such that, people don't feel burnt out or overwhelmed, which is bound to happen, but we're at least prioritizing our time on the best output for the business.
How do you think about building a moat within this business? Because I feel like it's obviously a massive opportunity, and I would imagine there's lots of folks that are going after this actively or planning on going after it. So, in your opinion, how do you build the strongest moat around August?
Yeah, it's a great question, and I would say at the end of the day, it's owning the user and owning every piece the user does within the ecosystem. And so this is what I mean by credit is a hook. You when you extend a loan out to a client, the last thing you want is the client to then take that loan off platform and do things with it outside of the ecosystem of your product suite. And you want that to remain within your ecosystem, whether or not you make money off of it, because then you can build a number of features off of that, and you make things a lot more compatible and easier to use. There is limitations on this. Clients cannot only have one counterparty that they engage with. Same thing happens with Prime. No traditional finance fund only has one banker they work with. They're required to use multiple. But at the end of the day, you want to be one of those three that they do all of their activity with, and you want to have a certain percentage of their market or wallet share in order to really be able to create that moat. And then the last thing is, as much as we want to claim that our ecosystem, our world is anonymous, everyone still is human, and humans rely on relationships. And at the end of the day, clients want to just work with people who are nice and respectful, treat them well, fight for, whether it's whatever token they're holding, fight for whatever yield they're trying to get, fight for whatever returns they're looking to make. They really want someone who has the client's voice in mind at all times, and so that's really the moat at the end of the day. It's both on the relationship side of things and also making sure that the client doesn't really leave the ecosystem of the product suite you have.
What has been your hardest decision that you've had to made that you've had to make as a founder?
That's a very good question. I would say, we haven't always made the right hiring decisions for both parties, and so being able to hire fast and fire fast is always a very tough decision, but it's the right one at the end of the day for the business. That I would say is number one, and then same thing goes for picking different partners you want to work with. We have gotten very, very, very fortunate that we have said no to working with certain partners in the past because we didn't like the way they spoke to us, or we didn't really like the interactions we were having with them. We didn't necessarily think that they were very truthful. Those partners ended up blowing up a few months after we made that decision. And so while it felt like, we were walking away from a very large revenue opportunity, the gut feeling of, again, going back to the relationship aspect of just doing business with anyone is if it doesn't feel right, it likely just isn't. And you need to walk away from that opportunity.
How do you view raising venture capital as a founder? Because I feel like I don't know, it can be a drug where people are well founders are uh, kind of addicted to the easy money, easy-ish money comparative to raising versus actually generating revenue. And some founders, I feel find it very hard to get off that. And if they can raise, they can raise like no problem. But like I just feel like we're entering an era with and it's going to sound typical now, but with AI making software production easier and you can do a lot more with a lot less. I'm kind of the opinion that kind of lean and mean is the ideal, but some people do the opposite and do quite well. Like, if you look at Wiz, I think they exited for 32 billion, and they were aggressively fundraising throughout their history. So I guess it also depends on what you're building. But in your opinion, as a founder, how do you view venture capital?
It really depends on timeline and timing and how fast you wanna grow. If you are comfortable with growing, steadily over the course of 10 years with a team of 2 and you have the means to support those team members, then I would say by all means, you don't need to necessarily go and raise venture funding. The other example is Hyperliquid. That team trading in general is also very different. If you start with a pool of capital and you're able to grow that significantly, and then that sustains the company enough to build products on top of it, then again, by all means, go do that. You've seen people try to raise money via Echo as well in some of these kind of ICO like token sales. But at the end of the day, what really matters is what is it going to take to build a good product? And I still think that that is tremendously hard to do. And it takes a significant amount of capital, because you need to hire really strong engineers. You need to hire really strong designers. You need to be able to hire, someone who can sell the product incredibly well and maybe has a Rolodex of partners they can sell into. And all of that requires that initial jumpstart of capital. And then it just, really depends on timing. We raised for August the first, we received our term sheet the week FTX collapsed from Hack VC. And I will forever stand by this that, it takes a certain amount of conviction in the space to write a term sheet when, during the biggest capitulation in the history of crypto. And you just couldn't do that, out of your own pocket of capital. And so I think that that's absolutely tremendous. And there is a benefit to working with the right partners. We currently work very closely with Dragonfly, and they have done so much to help push the business as well, and have been a tremendous support. One example of that is, half of the team that we've hired through the help of Dragonfly. And if you think about just the recruiter fees that we would have paid on those employees, that alone, is a huge cost saving for us. So I think it really just depends on who you're working with, the timing in the market of when you're looking to push whatever product or industry you're looking to push into. And then lastly, how quickly you're looking to grow. It's doable. It's just a lot harder to do.
All right, 10 years from now, where is August?
Yeah, great question. 10 years from now, August is, the one-stop shop that both institutions, but with regulatory clarity, high net worth and retail go to in order to trade, borrow, lend any crypto asset across CeFi, DeFi. You are completely abstracted away from different blockchains. You're completely abstracted away from whatever the underlying protocol, exchange, market maker, OTC desk is, and you have just one user interface to engage with. That's really where we see ourselves grow and stand and, integrate into the back end of the likes of Robinhood and so forth.
Amazing. That's awesome. All right. So I want to ask a kind of a big picture question here. BlackRock and everyone in crypto has been talking about this for years, but this is, the tokenization of all securities and all types of assets. What are your thoughts on that? Is that like a no brainer? Of course it's going to happen, or you're like, nah, it's going to happen, but with very specific assets and not everything is going to be kind of tapered. What is your opinion there?
I think it's gonna happen to everything. And we're actually trying, positioning Upshift, the retail product, to be the platform that supports tokenization of everything because it is absolutely coming. FTX used to have this where they had, equities. You weren't necessarily buying the underlying, but you could trade, for example, Apple, Google stock. And the beauty of that is, for us, when we think about it, we potentially have easy access to those equities, but not everyone in the world does. And a lot of people want access to those markets. And so we've seen a lot of activity happening with Robinhood saying they're going to tokenize, Coinbase saying they're going to offer, Kraken just announced this week that they're going to offer tokenized securities. And so, with regulation, there's a way for you to do this in a very regulatory, clear way. And the upside of it is one, it's operationally more efficient. Two, it's 24/7. There's absolutely no reason that equities shouldn't move to a 24/7 market. I know it's going to be painful operationally. No one wants to work Saturday, Sunday, but FX is already almost 24/7. Crypto's 24/7. You actually can see market trends happening on Sunday before equities markets open up because so many people have now, crypto in their portfolio and are looking to hedge macro. So things like that, where we're going to see the entire space of anything tradable come on chain. And then as you think about, all the things that you and I probably heard back in 2022 or 2020, excuse me, where, you had real estate, you had some of the REITs, you had some of these other assets become tokenized. It was not the right time in the market for that. But as you see more of these institutions, one example is, life insurance. I think I just saw a company come out with potentially tokenizing that. That becomes a lot more interesting once you have the right players past the learning curve of what that actually looks like in practice.
Awesome. All right, Aya, this has been amazing. Time for the closing questions.
All right, let's go.
All right, what is the best advice you've ever received?
Best advice I've ever received is the best decisions are typically the ones made for you. And I really hold that to the grave.
Can you elaborate a bit more? What do you mean made for you?
Yeah. So whether it is a decision someone else has made that has impacted you, market, for example, a company capitulating, raising the week that FTX collapsed, starting a company because of, some event. All of these things are typically decisions made outside of you owning 100% of everything that led to that end goal. And I would say those are typically the best ones that you have in life. And I don't remember who exactly quoted this, but they said that if you look back in your life and you can connect the dots of how you got to where you got today, you should be able to take that mindset. I think it was Steve Jobs, and connect the dots to the future. And a lot of that has to come with trusting that as things happen, they happen for good reason. And what's the outcome that you can achieve or draw from those decisions that are being made to push yourself forward?
That's awesome. All right, so you're not allowed to work in Web3 or at August. What would you be doing?
Yikes. Let's see. If I couldn't work in Web3 or August, I'd probably spend a lot of time either in self-driving cars. I love all things nuclear, although it's way above, I wouldn't say I'm an expert at all. And then, anything as it pertains to space. I would say those are kind of the three areas that are
Very cool. Very cool. All right, you could go back in time before starting August and give yourself one piece of advice. What would it be?
just keep grinding. I would say, especially working in an industry with so many market cycles where, every 2 to 4 years you feel like you have officially lost your job for the nth time. I would just say that the the market, the space, and people really reward those who grind and recognize that, and just to continue pushing on.
Love that. All right, what trend is totally overhyped and what trend is totally underhyped?
Yeah, great question. So I would say AI for both. And that's because AI is kind of used as this catch-all nomenclature that I think in crypto we use the term institutions. Everyone's an institution and the institutions are coming on chain. We've been hearing that forever. And what I mean by that is, people perhaps say that AI is going to really change the way we work, do business, operate on a day to day. But similar to crypto, there's a huge gap in where we want artificial intelligence to be and where it is today. Although you can say that it's growing tremendously fast, it's also underrated because of the way you can use it on the back end. And so I think people don't often think about that you want to outsource the unsexiest parts of your life in order to, be able to work on things that really have higher output. And what I mean by that, you asked me earlier about reporting, right? And so AI today, what we've done is we've built an AI chatbot that you can type in a sub account of ours, a smart contract, and it will actually pull a report for you. How incredible is that? So incredible, because think about how painful it is to do accounting and reporting. That's the type of AI that I would say is under recognized today. The things that people wanted to do are, tend to be more in the far sexier category of, um, all of the machine learning or being able to completely outsource your job or trade on my behalf. And we're just not fully there yet. But I would say as per the back end operations, we absolutely are there yet. We just need more companies playing in that arena. And then once we can do that, we can spend more time on some of these front end capabilities.
That's great. All right, last question. What is your proudest accomplishment?
Yeah, that's a good question. I would actually say my proudest accomplishment is the community that I've built around myself, whether it is the team members that I'm so fortunate to have, at August, the ecosystem of investors that I've been able to surround myself for the business that have, really pushed us in all the right directions. All of our partners in the space have been just absolutely tremendous. As I mentioned to you before, picking the right partners can sometimes make or break a business. Family and friends is obviously really important. I think, having started in crypto in 2018, everything was really about peer to peer and the being anonymous and this trustless system. And as you've progressed through all of the market cycles over the years, you really anchor to wanting to work with people you can trust. And so being able to surround myself with those people has been tremendous. It's led to a number of different business opportunities, but more than anything, just a level of fulfillment that I hope everyone can achieve in working in the space because we've all seen the rug pulls. We've all seen, the hacks that happen, and that's not where we want the industry to go. And I think there is a really strong group of people who are building the foundation for it to go in the right direction. So really, really proud to be surrounded by some of those people.
Amazing. Aya, thank you so much. This is incredible. Where can people learn more about August and yourself?
Thank you so much for having me, Andrew. This has been such a blast. For me, Twitter, Aya, AYA_Cantor. You can also go to August's Twitter handle as well. On augustdigital.io is our website. And just reach out. My email is aya@augustdigital.io. Would love to hear from folks.
Amazing. Thank you, Aya.
Thank you for having me.